Coming up on the program, all eyes on the outcome of the Ghanaian election and its effect on government spending plans next year. East African community beats Africa tariff or AFCFTA tariff over deadline. The Tanzania Aviation Authority launches 5-year strategic plan. Hello and welcome to Business Incorporated. I am Bisi Adebayo. Well, let's get the show started with intraday numbers from major markets here in Africa. And South Africa's JSE shaved off 0.46%. The NSE rose 0.48% on Friday. However, the market in Nigeria is trading at the moment, but we'll get those figures as soon as we can get them. But elsewhere in the region, the EGX30 rose marginally by 0.04%, and Kenya closed positive 0.93% on Friday. And investor sentiments in the Middle East were negative at intraday. The Qatari market declined the most by 0.62%, while Saudi Arabia's market lost 0.12%. In the UAE, Abu Dhabi's main index was in the red by 0.44%, while Dubai's index eased 0.19%. European stocks open lower today as the market focuses on a last-ditch effort between the UK and the EU to reach a post-Brexit deal. Investors are also monitoring the growing coronavirus cases around the world. Chelsea Delany tells us more, and she joins us live from the Frankfurt Stock Exchange. Chelsea, good afternoon. It's good to hear you again. Now, Germany's coronavirus case growth hasn't slowed, and on Sunday, the state of Bavaria sharply ramped up restrictions, saying the partial lockdown in place since early November isn't enough. Now, what are the new rules, and could the rest of Germany soon face tougher restrictions as well?
So this is an extreme tightening in the measures against the coronavirus in Bavaria. Bavaria has declared basically a disaster scenario because the number of cases is rising still quite strongly in that state, but also throughout Germany as well. So starting later in this week, Bavarians will only be able to go outside for legitimate purposes, for necessary purposes. So to go to the grocery store, to go to the doctor, to go exercise. That's a big difference from the rules that are in place throughout the rest of Germany, where there are really very few restrictions on your ability to go through your daily routines. What we've seen in place since the beginning of November was the so-called lockdown light, where the main measures were to close down bars and restaurants, but the vast majority of the economy, schools, all really were remaining open. And Bavaria is not the only state in Germany that's facing a really dire situation with the number of cases, and also with the increasing capacity limitations in hospitals. Berlin, for example, as well as the eastern state of Saxony, also are seeing a very high number of coronavirus infections on a pro rata basis. So this is going to certainly raise a lot of pressure on these states to consider further restrictions. We had seen German states and federal ministers, as well as the central government, decide on some easing of restrictions for the holidays, for Christmas and for New Year's Eve. Some will likely have to take those back now as we continue to see the number of infections go higher. And there is, of course, more discussion about stricter rules throughout Germany as well. So the fact that this lockdown light hasn't really done much to slow the number of cases, that likely will put more pressure on other states to increase restrictions as well.
Meanwhile, Chelsea, Germany's factory sector has been holding up well despite the continued spread of the virus. Now, we saw industrial production rise for a 6 month in October, and that's according to new data. Can the manufacturing sector help Germany to avoid another economic contraction in the fourth quarter?
Well, we have seen the German industrial sector really emerge from this crisis quite unscathed. Many German manufacturers are continuing to see a pretty solid amount of growth, and in particular, they haven't been heavily impacted by the restrictions, this so-called lockdown light. Many continue to see growth, particularly in the automotive sector. German industrial companies are still seeing giving pretty optimistic forecast for the coming months. But of course, at some point, this likely will start to have some sort of impact on the broader economy. The manufacturing sector is starting to see expectations for the coming months come down a little bit. So there is certainly concern that this, what's really been the engine of the German economy, that won't really be able to last much longer with the rising case infections in Germany.
Let's talk about China's economy, which is also booming, with the experts surging more than 20% in November. Is that in any way going to spark more tension over China's unequal trading relationship with the rest of the world?
It is likely to do that. China's economy has really emerged as the bright spot for the global economy. They're the only major economy expected to grow this year, and that's in large part because of how strong their manufacturing and factory sectors have been. That's in part because China was really the first country to fight the coronavirus and the first to emerge from the virus. So while many other countries were shutting down in the summer and late spring, China was opening back up, and they've really gone full force since then, as well as the fact that they are seeing a lot of demand for the products that they produce the most, things like masks or tech equipment for remote working. But for the rest of the world, this is certainly a worrying development because there's been a lot of controversy, there's been a lot of criticism of China's unbalanced relationship with the rest of the world. They have for decades been exporting a lot, so a lot of other countries are buying a lot of their goods, but they're not really returning the favor. They're not buying a lot of the goods of other countries. They had been talking about rebalancing their economy to get domestic consumption higher and to make this less of an unequal relationship throughout the rest of the world. But because of the virus, they've sort of softened that goal of theirs. So this likely will lead to more tensions because this unbalanced relationship has only gotten more entrenched throughout the pandemic.
Thank you, Chelsea. We'll see you again tomorrow. And talks between the UK and the EU are due to resume in Brussels in a final bid to reach a post-Brexit trade deal. But let's find out how this is playing out in the UK. And Simon Pusey will be telling us about that. Good afternoon, Simon. I know you spoke to Chimmy about this in the morning, but are there any updates yet on Brexit talks?
Hi there. Yes, amazingly, there is an update because often when we talk about Brexit, it's more of the same. Well, the latest breaking news is that the EU's chief negotiator, Michel Barnier, has told MEPs that negotiations on a post-Brexit deal would not continue past Wednesday. So Wednesday really is the final day. We do have finally an end game approaching these trade talks. According to sources present at this briefing that happened this morning, Michel Barnier also warned the UK that a deal would not be approved by member states if it pressed ahead with passing the Internal Markets and Finance Bill into law. You may remember that the Internal Market Bill was rejected by the House of Lords a few weeks ago because essentially it was going to break international law. But it's returning to the House of Commons today and tomorrow, and it will probably pass again through the Commons. Talks are ongoing today between Michel Barnier and his counterpart, but the EU mood was described as downbeat ahead of chief negotiator Michel Barnier meeting the UK's Lord Frost today. Mr. Barnier briefed EU ambassadors early this morning saying that serious divergences remain. Prime Minister Boris Johnson will speak to European Commission President Ursula von der Leyen later this evening, and people do view those talks on the phone as pretty critical. But I'd say, you know, there was some rumours earlier this morning that Boris Johnson was a few hours away from pulling out completely, which obviously affected the markets. So those are the latest sort of headlines really we've got, is that the EU's chief negotiator Michel Barnier is saying that negotiations won't continue past Wednesday.
We'll see how that goes. Now, Mike Ashley's Fraser's Group has confirmed it's working on a possible last-minute rescue of Debenhams. How certain are we that the deal will happen or even save the chain?
Yeah, like you say, Mike Ashley's Fraser's Group has confirmed it is working on a possible last-minute rescue of that chain that's called Debenhams. It's a big name here in the UK. It's been around for years. And the department store is currently set to shut all of its stores by the end of next March. And that puts at risk about 12,000 jobs. And that's after administrators failed to find a buyer for the business. Mr. Ashley has previously bought other struggling high street businesses. And he did used to be a shareholder in Debenhams. But Fraser's said there was no no certainty it could save the chain. One of the biggest issues, it said, was the collapse into administration last week of another high street giant, which I think we told you about, Arcadia, which is the biggest concession holder in Debenhams department stores. So that really proved difficult for Debenhams. Liquidators then moved into Debenhams on Wednesday to start clearing stock after a potential rescue deal with JD Sports fell through. But like I said, Mike Ashley does have form of sort of sweeping up these big department chains that were once high flyers and very profitable at a much lower cost. That's kind of his sort of business model. His modus operandi is to sort of go in and get things cheap and then build them back up. So we'll have to see whether that happens. But yeah, like I said, 12,000 jobs at risk there. So a lot of people looking at that, and it also could be a sign of things to come for other department stores that are sort of on the brink of going under.
Absolutely, Simon. I know you touched on the markets earlier, but tell us, how are the markets performing at intraday, talking about equities and currencies?
Yeah, so it really does rely on what the latest rumour mill is with Brexit. And I think in early trading, when it emerged that Boris could be walking away in the next few hours, that was the rumour a few hours ago at least, and the pound fell really heavily against that. And what often seems to happen when the pound falls is the FTSE goes up slightly. So that's what's happened today, and that's the case at the intraday. FTSE is up slightly across the board. The all-share is up 0.21%, the FTSE 100 up 0.35%, and the 250 is up quite a significant amount there, 1.30%. But like I said, the pound fell sharply on early trading because of those sort of gloomy headlines about Brexit. It is down heavily on other markets in intraday too. It's down 1.3% on the dollar, down 1.10% on the euro, and down 1.29% on the yen. So the pound really falling fast there as it emerges, or it looks like, we may be coming to the end game of these trade talks. And there was, a few rumours that maybe the fisheries there's going to be agreement on that. That was quashed by Michel Barnier this morning, and also by the government, the UK government, saying that, nothing had been agreed on fisheries. So it really does depend on sort of what the latest rumour is for the pound and where that goes. But down very heavily at the moment, and we'll have more updates for you as those Brexit negotiations continue. But Wednesday, it looks like, is the final day, and before, after Wednesday, it looks like both sides will go their separate ways.
We'll just keep our fingers crossed till then, Simon. Thank you. Ghanaians are voting in elections today in which President Nana Akufo-Addo and his main rival, former President John Mahama, are each offering plans to help the economy rebound from its first quarterly contraction in nearly 40 years. Now, eyes are on the West African economic powerhouse to see if it can maintain its standing as a stronghold of democracy in the unstable region where election disputes this year have fanned fears of a slide back into authoritarianism. Now, last year, Ghana emerged from a 3-year lending program with the IMF only for the new coronavirus to knock demand for its key exports of oil and cocoa. Associate Practice Lead at Frontier View, Matt Kinniger, joins us now to discuss the effects of the elections on the Ghanaian economy. Good afternoon, Matt. Thank you for joining us today. Now, given Ghana's track record of peaceful transitions of power, does this election pose a risk to the country, and who do you expect will win?
Well, thank you for having me on the program today. So in terms of the outlook for whether the elections present a risk to the peaceful transition of power in Ghana, we can't rule out some intimidation ahead of the election, like we've seen elsewhere in sub-Saharan Africa recently. But new laws have been introduced to try to mitigate against this. But by and large, we do expect them to be quite effective. We expect the elections to pass off peacefully. So, as you have mentioned, Ghana does have a very strong track record of peaceful transitions of power. The first peaceful transition of power was in 1992, and we do expect this to continue this year. So we aren't particularly worried about the outcome. In terms of who we think will win, it's very difficult to call this year. The opinion polls are very close, but we think the incumbent, Mr. Akufo-Addo, and the NPP are probably to secure victory. But as I said, it could go either way because it's very close.
Now, one of the major challenges facing a new administration in 2021 will be rising public debt and a ballooning budget deficit. How will the outcome of the election affect government spending plans next year?
Yeah, so Ghana certainly has been very badly affected by the decline in global oil prices. The government before the coronavirus pandemic was assuming very significant oil revenues that was meant to finance a very ambitious infrastructure investment program and increased civil service wages and health spending, for example. This year, we are expecting the fiscal deficit to rise to 15% of GDP. It will remain around about 10% next year. So some pretty significant fiscal stress facing the new administration, whoever comes in next year. In terms of the different policy platforms for the different parties, so the NPP, Mr. Akufo-Addo's party, wants to stimulate the economy and focus on the development of steel and other industries like that. And the NDC wants to introduce tax cuts to stimulate employment growth. But either party, so whoever wins, will face really significant fiscal pressures. They will probably unlikely be able to fulfill their fiscal aims, and there's likely to be consolidation, tax increases and spending cuts, no matter who comes into power.
But the cedi has been remarkably stable during the second half of this year. So what's the outlook for the currency once a new administration is in place and the economy begins to recover?
Yeah, so the cedi has historically been one of the most volatile currencies in sub-Saharan Africa. 2019 was a very good example of this. But the central bank has been able to stabilize the currency over the last 6 months or so. So to an extent, the country has been insulated from the worst effects of the coronavirus pandemic from a currency perspective. Next year, the cedi is likely to fall. So we probably expect the central bank to stop these interventions. So this could mean more depreciation of the cedi. But interest rates are likely to rise towards the end of next year as inflation picks up and the economy picks up. So in summary, really, we expect some pretty significant depreciation of the currency in the first half of 2021, followed by some stabilization towards the end of the year.
Associate Practice Lead at Frontiview, Matt Kinniger, thank you for your time and do enjoy the rest of your day.
Thank you.
And with less than a month to the kickoff of the African Continental Free Trade Area, the East African Community submitted its tariff offer on December the 3rd, beating the December 5 deadline. The EAC's tariff offer now brings the number of countries to 40 that are ready to join the continent-wide duty-free, quota-free movement of goods on January the 1st, when trading under the AfCFTA agreement starts. Meanwhile, 14 countries have signed the agreement but not yet submitted their tariff offers, and they include Algeria, Angola, Comoros, Djibouti, Eritrea, Ethiopia, Libya, Morocco, Mozambique, among others. The EAC had missed previous deadlines as the bloc was putting together its offer that addresses the trading regimes of different partners such as Ethiopia, the DRC, and Sudan. Well, let's cross to Tanzania now, where the Civil Aviation Authority has launched a 5-year strategic plan aimed at improving participation and the private sector's investment in untapped areas. The strategic plans, slated to commence on July the 1st, 2021, will enable the authority to gather market information and provide viable data which would guide private operators in doing business in various areas, including small airports. Data from the strategic plan shows that passenger traffic growth will reach 5.92 million by the end of the strategic plan, up from 5.36 million in 2020-2021. The increase will be attributed to increases in domestic passengers, opening and upgrading of some domestic airports, increased numbers of tourists, and the positive impacts of the recently signed bilateral air services agreements. I&M Group shareholders have approved the acquisition of 90% of Orient Bank Limited, Uganda. The deal is subject to regulatory approval from the Central Bank of Kenya, the Bank of Uganda, the Capital Markets Authority, and the Common Market for Eastern and Southern Africa Competition Authority. The Nairobi Securities Exchange listed lender is required to effect payment of the purchase consideration for Orient shares for $33.6 million. I&M currently runs a corporate finance advisory business, I&M Bobridge Capital, in Uganda, and the acquisition of the bank will expand its operations in that market. The deal is set to add to I&M's regional banking operations comprising Kenya, Rwanda, Tanzania, and Mauritius. And that's our program today. Thank you for watching. I am Bisi Adebayo.